Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, good morning. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Namaste. If you are new to these webinars, please visit TradersWay.com and allow us to earn your loyalty and respect. First thing you should do is create a demo account, then download MT4, and then you'll notice just below the video here in the description, there's a link to download all my chart templates, all my chart profiles, my leading indicators, my lagging indicators. It's all yours, absolutely free. Compliments of the firm, TradersWay.com. So please ask questions, get involved. We're going to cover gold and oil, dollar pairs, yen pairs, and pretty much anything else that you want to talk about. This will be about an hour and 15 minutes of our Forex journey for the day. So your questions are key to this journey, to our path. You are the boss. I am simply and humbly a currency trader like you. I just happen to have 17 years of experience. So get involved. Participation, huh? Please like and subscribe. That's important for our community. So if you value this community, please like, please subscribe, and please comment. It's really amazing, 1,000 people will watch the video and 8 will leave a comment. How terrible is that? Even just a hi or a thank you or what currency pair you want me to cover. I mean, come on, leave some sort of comment. Okay? I mean, come on, seriously. An hour and 15 minutes of work. Yeah, leave one comment. That'd be great. Good morning. Opinion about possible retracement, current silver rally. Claudio's really hot to go on silver. All right, well, yeah. Oh, okay. Yeah. We have it here, I think. Hey, yeah. Okay. Now, first of all, Claudio, let's take a look at what's going on. We've hit a funny line right here. This is the, it's not R3, is it? What is it, M5? Weird. But anyways, it seems like somebody's using pivot points. Somebody anyways, huh? So what happens in this situation? Now, first of all, you have to understand that this was the projected entry for a bull. And based on that projected entry, this was the projected target. Okay? Tuan says, for a bear. Oh, you're talking about a different pair. Stick with the pair that I'm on, guys, okay? So anything outside of this is unusual. Another way of saying unusual is risk. Okay. Now, in this unusual, risky area, I do not short. I do not short in a situation like this. Okay. So I have choices. Trade or do not trade. There is no short. What's up, Davey? So you just go back to general technical analysis then. What are the possible buys if a buy shows up? Well, that's a pretty easy question. You have dynamic level support, and then you have price support. My mouse is not working. There we go. So you have dynamic, and what do you call it? Structural? Morning, Daniel. Morning, TBM. Morning, Raymond. Good morning, Alan. Good morning, Odette. Okay, so you have this or you have this if you're a bull. In there, you cannot be a bear. There is no bear. Okay. Now, if we were a bear, you could maybe get one there if it reversed, most likely like a double top first. If you were really a bear, that's the actual short. Okay. That's really the only legitimate short. This is a counter trend trade. I don't count that as like a legitimate short. You're tracing price action against bulls that are taking profit, which is a lot different than a downtrend, right? This is where if you were a bear for the month of July, that's where your short was. And if you got that right, it would have looked like this, okay? So this, not actually a short. This may be a counter trend. This, look, it's so unbelievably bullish. There's no way, there's absolutely no way you can sell this and be a conservative, disciplined trader. Okay. So Brooke, what's up, Ernest? Sound zone. Or is it Sazone? Okay. So just food for thought, yo, on that silver. Cool. Anything else going on? I think I said yesterday, even though I'm a bull, that it's set up to be a bear. And I showed you this, and then I showed you the breakout, right? Pull back, roll reversal. And I said there's going to be a roll reversal here for the day, right? But I said this yesterday when we were still in here. Breakout, pull back, that would still be the plan. Thing is, you would have been short Asia. Thank you, Claudio. Make sure you leave a comment, guys. Seriously, why isn't there 250 comments? Right? Leave a comment. Just say, hey, thanks, or that was great help on that one pair, or can't wait to see you tomorrow, or whatever. Have a nice weekend, Wayne. You know, just anything. Just leave a comment. It's good for our community. And if you want our community to survive and thrive, it's a small investment. Okay. Now, the interesting thing about this, though, guys, is you notice that it required a front run. That you were shorting Friday's trade on Thursday. But isn't that what I'm trying to teach you? Like, you're thinking ahead. Okay. But we'll get there. We'll get there. Thank you, man from Earth. What I mean, though, is in the recording. Okay, in the recording. And if you want, leave it in yesterday's video, right? But every day, leave something. So if you have the time now, just look at yesterday's video and just leave a comment. Hey, thanks, man. Just every day, leave a comment. And that's the best way to do it at this time, be in this video, but just on the side browser, just pop open yesterday's video and leave a comment. Just any comment would do. Chuck says, so if there's no profit taking in a taking profit zone, is it right to think that the bulls have entered in a longer term? Or there's something unusually bullish. That's all it means, right? We don't know why. Are longer term trades? Yeah, maybe they entered the trade and they're not taking profit in July because they're not in the office. Or something's happened in the market to create something unusual. But all we know is based on our algorithm, our math. So I'm not actually looking at a chart now, but let's make some lines. We say this is generally where if you're a bull, you would enter. This area up here, if you're a bull, is where you would exit. And that's based on what? Stuff that happened on the left. That's our algorithm said, based on what has been happening, we would expect a low buy zone. Let's say it was like this, and a high up zone, right? But what if something unusual is happening now that didn't happen on the left? That's so all it says. We don't know why, but the market is way above where we would have expected it. Doesn't really matter why. But think of it. What kind of person would sell into something that ridiculously bullish? What's the logic? It can't go any higher. Right? I used to be a currency trader. It was a tough gig. Right? You're going to have to drown your sorrows with a trading strategy like, it's so unbelievably red hot, I'm going to sell it. Like it's financial suicide, right? Everyone on the planet's buying it. I think I'll sell it. What? So, hey, welcome to the summer, guys. So we had this move yesterday, which we planned out beautifully as a short. It dropped for 2 hours straight, got to support, which we also analyzed, and what happened? The Fed backtracked what they had said 2 hours earlier and whatever, right? And then what did it do? Do you remember this? That was our plan B sell. This was our plan A sell. So theoretically, it fell for 2 hours. You could have made money. And then theoretically, you could have sold it off plan B and still made money. But welcome to the summer, huh? Where if you're hardcore, unbelievably bullish and your entries are like tight, you'll get paid and vice versa. Right? Amazing, right? Can I check yen and Swissy pairs? Yes, sirree, Bob. Ernest said, I focused on winning trades instead of massive pips. Yes. Yes. Good job. By the way, I got an email yesterday about fundamentals, about something what I said, like the Fed is expected to cut interest rates. Why would the dollar get weak? Why doesn't it get stronger? Okay. Well, a few reasons, but let me cut to the chase. If it's only the U.S. we're talking about, then it doesn't affect the dollar. Because remember, to make a currency change value, you need it to cross a border. So if it only impacts the U.S. economy, nothing happens. Now, the second thing is, if you've taken the fundamentals course, you'll know that the mechanical process in which they actually lower interest rates increases money supply. And that just as a side effect weakens the currency. But a lot of people say, well, if they cut interest rates, that'll make the economy boom. So the dollar will get strong. No, you don't understand fundamentals. If that's what you think, you're wrong. Good economy, strong dollar. Nope, sorry. Especially if we're talking macroeconomics and not micro. So if you can think of micro as the U.S. economy only in of itself, and macro as global trends. Other countries. Okay. What's up, Barry? Global macro trends. Oops. Hey, guess what, guys? I'm going to do Monday's webinar from the beach again. So I will see you on Monday from Florida. Oops, didn't mean to do that. Cool. What else do I see here? Nothing. Right? What is the destination that's on the map? What's actually on the map is this. Okay. So what this might be, guys, over the long haul. See, if you're stuck on 15-minute charts all the time, you forget where we're going, right? And you get caught in the middle. What's actually seems to be happening is this. Sab's going to be at the beach. Chuck says, so windy then. If it's windy, I'll do it from the room or something like that. Lots of people going to the beach. Right on. I'm looking forward to like going out to the beach at 5 in the morning with the sun rising, walking in the water and it's warm. Cool. So, update our regression. Cool. So, it really comes down to, are you a bull or are you a bear? Check this out. You ready? If you're a bear, it's a standard breakout type strategy, right? Okay, breakout, up, up, roll reversal, sell, down, 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 right? Up, sell, down, 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 up, sell, down, 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 and suggested sell zone, sell. Just price action, guys. That's all it is. So are you thinking about August yet? Well, if you're an August baby, meaning if you want to start planning out August, you would think something like this. The risk of that, however, is the Fed. So if the Fed cuts, you'd think the dollar would weaken. But I'll tell you what, put this in your pipe. What if the Fed cuts by 25 basis points and then says something like, we may or may not, probably not, we won't cut again for the foreseeable future? What if they say it's 1 and it's done? Dollar will strengthen, even though they cut interest rates. Do you guys remember the South African rand yesterday? They cut interest rates and the rand gained strength. Why? They always said that they are now heavily data dependent. And then we just saw the data was stable, which means no more cuts. So even though they cut by 25 basis points in South Africa to 6.5, the rand went up in value. Why? Because they indicated they were at a bottom for interest rates. So it's the same thing. It's not that they cut, it's the policy that's in place that matters. So if there's a one and done scenario in the United States, it would look like this. But that's a pretty heavy bet. Okay. The other plan is this. So either way, you kind of want it to stabilize, right? Well, that's why we have a regression channel indicating where that might occur. Okay. And of course, all it's saying is, what is one standard deviation from the mean? Here's the mean, right? Do you guys remember your stats? Mean, median, and mode. So you establish the mean, right? And then you figure out the standard deviation. And you got yourself a regression channel. And regression means backwards, or right? Regress. So it's saying when it's high, it may go back to the mean. When it's low, it may go back to the mean, right? It returns to the mean. So how far does it deviate from the mean? What is the standard deviation? On average, how far does it deviate from the mean? And then regression means go back to the mean. So anyways, just think about it. So this says on the longer term, down, and for the shorter term, it was up. Is it ready now to go down? Okay. You notice how this didn't go here? So when we're down here, the algorithm will adjust and will tighten this up because the standard deviation has narrowed. Okay. Especially, I think, if you change what you're measuring. So if you, if you go from, instead of the beginning of that move, but to the end, right? It changes quite a bit, but anyways, doesn't matter. See? I'm just moving it left and right. See, since then, sideways. Oh, from June 1st? Yeah. Actually, the June Fed meeting, look at that. Since the June Fed meeting, nothing's happened, except for that giant drop, of course. And I'm just moving it left, move it left, add more data, add more data. Okay. So we had it there. Sometimes these little these indicators, remember, they don't tell you what to do. They help you analyze the market. So like these might be good training wheels for you to say, well, what is the trend? What has been the trend since the middle of April? What has been the trend since the beginning of June? So you could say, well, it was slightly up, but in a downward market. Well, what do you want to do in a downward market? Sell, sell, sell! Okay. I like price action best for that, but right, if you can't see the trend, you're going to be in trouble. Oh, thank you. Is it Jackal Thomas or just Shell Thomas? Jackal. Jack? Jace? Jackal. Mark Williams says, is it true that interest rate wise, the USD is far from a carry trade? Oh, you kidding me? It's definitely. J-Cell. Cool, man. J-Cell. Sounds like a cool cat. What was I going to say? What was it? Someone said something and I got sidetracked here. Oh, J-Cell says, using my pivot points, following my strategy, win rate is increased dramatically. Right on. Well, that's why I'm here. I preach to teach. Do some of you never had this? Is it true, interest rate wise, that the USD is far from a carry trade? Okay, well, let me answer it this way. Okay, the question is, someone's bashing the dollar as not really a carry trade. Well, let's not bash it. Let's analyze it. So we'll go here. And I will right click it. And let's see. So if you are long, you earn 300. If you're leveraged 100 to 1, you will earn 336% per year interest rate. So who asked the question? Was it Williams? Yeah, Markey. MW. If you're leveraged 100 to 1 and you stay long USD Swiss franc every day for a year and you made no pips, let's assume you use $100 collateral to get into a $10,000 position, which is one mini lot. At the end of 1 year, if you made no pips, 0 pips, you would earn $336 interest. Oh, J-Cell's got YouTube. Coolio. J-Cell's a pastor. Well. So anyways, neat, right? So it comes down to MW. Is that good enough for you, MW? 336% a year? If you're only leveraged 50 to 1, if you have an account in the United States and you're only leveraged 50 to 1, okay, so you only make 100 and, what is it? What were we talking about? 336? So 100 and, what is it? 100 and more than 25, 135%. It's a little, no, that's off too. Anyways, you're making good money is all I'm saying. Okay, very good money. So that's that. That's that. That's that. USD CAD is Oscar Mike. On a 1 minute anyways. Oh, my question was, are low rates why USD doesn't get stronger with the slight rise in rates at these? My only question was, are low rates why USD doesn't get stronger? Well, but the point is the United States has high interest rates. Right. So I think your logic's a little, so like Switzerland is charging negative point, what is it, 3.5 or 2.5 maybe? Negative, right? So if you borrow their money, they pay you. You put it in the United States and you're earning 2.5, right? So, right? Actually, that's off. It's 65, right? So you're clearing 3.36% profit times your leverage. So, but like 2.5 versus like euro versus Swissy versus pound, right? Pound, these developed economies. It's huge. Versus yen, huge. So all you need is the high. Well, you need the high and you need the trend in the right direction. There's one other piece you need, Raymond, right? Thank you, Claudio. Another question about the dollar. If the stock market, can the stock market fall and the US dollar fall at the same time? How would that work? Foreigners would be removing their money from the US economy. Remember, what Americans do doesn't matter. An American gives a US dollar to another American, who then gives it to another American, who gives it to another American, who gives it to another American. It increases the velocity of money, but does not impact the valuation of money. It only changes when foreigners are doing something. So if the stock market's falling, what are people buying? All people, Americans and foreigners, Americans and aliens. What are they buying? Bonds. Bond prices go up. And what do foreigners want? They want to buy bonds too, because they don't trust their own bank. They don't trust their own government. In that case, they need US dollars first, driving up the value as they buy bonds. So typically, if just the US stock market's falling, it doesn't impact anybody. So this is why I always say you got to look at a macro level. Okay, the US, let's say the stock market's falling in the US, great. But what's going on in Indonesia, and Malaysia, and China, and Dubai, and Morocco? What's going on in Germany? What's going on in Russia? It's the foreign buyers of US assets that drive up or lower. Well, it's not really lower. So I'd say foreigners buying US assets drives the dollar up. Okay? And then Americans buying stuff from the rest of the world because they're filthy, stinking rich lowers the value of the dollar. So when Americans are not feeling filthy, stinking rich, they're not lowering the dollar. So from an American point of view, a weak dollar is fantastic because the only way to do that is because you're filthy, stinking rich. Okay? Okay? So you always got to think about it from outside the US. If money doesn't cross a border, valuations will not change. I highly recommend you take the fundamentals course, by the way. Because I only touched on the money supply issue. If you do not understand money supply, like when the Fed says, let's say next week the Fed says they're going to cut interest rates by 0.25%. Okay? If you don't know what that means or how they do it, you don't understand Forex. Okay? If you do not know how to manage the balance sheet on a commercial bank, how the heck would you understand central banking policy? Right? So if you're going to be a currency trader, you need, I mean, you just, it's elementary stuff, actually. You really, really need to know these things. All right. So let's look at some Swissy pairs today. Instead of going to the standard yen setup, let's look at Swissy. So remember, guys, leave a comment on today's video, or right now, leave a comment on yesterday's video. Okay? Okay. What trade do you see here? Oops, didn't mean to do that. What trade do you see here? Okay. Is the market bullish or bearish? Well, let's not answer that with an opinion. Let's just say from this day to that day, we'll measure it using a regression. Oh, it looks like it's more down than up. In fact, it looks down. Okay, cool. In fact, that we're down here shows us that we're accelerating. Roman, you cannot be yet, but that's very dangerous. Okay? Okay, that's very dangerous for you. Don't be yet. I'm not saying you're wrong. I'm just saying you're wrong right now. Okay. So if you happen to be a bear, let's say because of your analysis of the market on the daily chart, you'd go into a swing. And you'd probably do it, what, the last day of June? June 30th? And you'd say, well, if I were me, I would really like to sell somewhere around here. Okay. Okay. And notice how it actually lines up with the channel. Roman says it will go up. You will see. Oh, I'm okay with that, Roman. I'm just saying you're wrong now. I'm not saying you're wrong. You're just wrong now. Okay. There's nothing on this that says that. Now, very often, what drives these currencies are not on the chart. I give you that. And if I had to do it, I would say, well, a profit-taking move here and here, so maybe it does this. Okay? So it's a timing issue. I can tell you the prices I would consider, but right now I cannot tell you what time to get in these trades. Right? Okay? So it's just an issue of timing. Okay? If you bought it now like this, like that, even if you were right, it's so foolhardy and so aggressive and so if you just bought it now, it would be as close to degenerate gambling as you possibly could be. Okay, even if you're right, I would say it's not conservative, disciplined trading. Now, if you were waiting for it and you saw it maybe bounce here, and then it did this, and then it did this, and you know, that's totally cool. Okay, right? Like your analysis is probably okay, but the issue is timing. That's all. Roman says tomorrow, today. Well, but see, I don't want opinions. You have to say you are expecting it to bounce off that pivot. But even then, like, look, we gotta use reason. I'm not interested in opinions. Okay, we have to use reason. And we use two sets of reasons as traders, fundamental and technical, right? So if you're saying we're going to kick off of this zone here and then step up onto next week's, okay, then I'm okay with that. But that's not what you've said. And I said if it did it now, right? if you saw a double bottom, okay, I still think it's aggressive. Like, I would never recommend buying a downtrend. But if you had to do it, you definitely have to wait for a roll reversal or a reversal pattern at the right prices. Well, this is a good place for the first leg of the reversal, and this is a good price for the second leg. So and it could happen today because of the profit taking. Then you ride it into next week. Okay, you still face a lot of risk here, and then there's a lot of risk up here. I mean, so you have sort of the building blocks, if you will. But just to do it now, based on that, that's gambling. What you're saying is, I bet you it goes up from here. I'm not interested in that. No investor would be interested in that. And even if you're right, it doesn't matter. Okay, it doesn't even matter if you're right. So now, if that's your trade plan, cool. Well, let's set it up. You got the left leg. Where's the right leg? Then you need some price action. It's going to hit this. We know it's going to come down. I wouldn't even be shocked if it did a triple bottom first, because you're reversing an entire down market. So it's not likely to happen quickly. Okay? You see what I mean? Claudio says, well, our central bank doesn't want it below 110. And so, okay, but still, it doesn't matter. You need to teach yourself. We're talking about discipline here. We're talking about skills, right? I'm not trying to put you into trades. I'm trying to teach you how to build skills and do analysis. So if you're going to buy a downtrend, you better have hardcore support and you better have reversal patterns. If you don't have those things, you're a degenerate gambler. And even if the central bank is defending 110, great. You still need a reversal pattern before you even consider pulling the trigger, right? Or your trade does not have discipline, patience, and skill designed into it, okay? Yeah, and I'm not talking about moving averages and stuff, Roman. But, a moving average would confirm that it's done what you needed it to do, right? So if you're thinking like soon, let's say you're watching a 15-minute chart, okay? A 2155 cross wouldn't put you in, but it would confirm that, because you'd already be in by then, that things are going your way, right? But it's definitely lagging, right? Right? So don't worry about moving averages. Like, for example, let's do it this way. Okay. There we go. Okay, cool. So I see what you're looking at. Okay, so let's say this is your hardcore support. That's great. That's the first part of a trade plan. So you're a bull. And the first thing you need as a bull, especially in a downtrend, is hard core support. Okay? So we'll look at this and say, this is a hard reversal pattern on a weekly basis. And, this is a support pivot. It's a support pivot. It's not that important on a monthly basis, but it's definitely support. Cool. So you got the first part. That's fine. Great. And you're a bull. Great. Now the next part is you need a reversal pattern. So where's your R pattern? Well, we don't have that yet. And by the way, this doesn't have to be on a daily chart. It could be a 15-minute chart. I don't care. Now, if you get it on a 15-minute chart, it's probably going to repeat on a 4-hour chart, but nonetheless, right? So let's say it does sort of like this today. And I wouldn't be shocked if it did. It's still very aggressive because it's still technically bearish on multiple time frames. But you could take a shot here and jam your stop. Okay? Now, I believe the next thing that's happened is someone's going to short here on Sunday, Monday. But even if you're right, that doesn't matter, because it'll, let's say, double bottom down here, and now you'll have the right shoulder. So you could take a shot today if you get, let's say, even a 5-minute reversal pattern. I don't care. You just have to show it to me, right? And then don't be shocked if you get challenged on Monday. Why? Because it's bear. The market is bearish and you're buying it. Don't be shocked if you're early, right? So anyway, so it will probably give you a double bottom here on Monday, if you're right. And then it'll come back up and re-challenge this, but now make a higher high up to here. Well, that's what the market is actually predicting if you're a bull. This is a bull zone, and this is the bullish target. So what it's saying is, in these conditions of mostly bearish, and you're being a bull, the most you could expect is get kind of the top of the range, and then you'd have to set up really next month's trade, which may be bullish, and you need to start climbing up onto those support, like if you think of it like ladders or something, right? In that case, you're slowly stepping into a full-on reversing market, which you're kind of saying, which is totally fine. You just can't do it now blindly without all this other stuff. You can take a shot, jam it, and say, well, you're scalping in, and then try to leg up on the next move and leg up on the next move until the market becomes like this. Okay? Remember, don't run into the fallacy of trying to pick the bottoms. Okay? And you got to say it. As a strategy, picking bottoms stinks. Yes. Think about that. So just be careful, right? So I never once said you were wrong, Roman. Just you got to enter it properly. So you might have a little scalp here, then you might have a little weekly swing here, and then maybe next month you have a monthly swing there, and you start tiptoeing into it. But you being the first one in is, especially as an amateur retail trader, is foolhardy. It's not the skill that you want to be developing. Okay? Okay, I don't want to talk about it anymore. You either buy into that and you say, hey, thank you, Wayne, I really appreciate that. If you keep arguing with me, then you're not here to learn. So you're just here to prove yourself right. Okay. All right. What else is going on? Pound Swissy. Oh, did I just kill Pound Swissy? No! Oh, there it is. Okay. Okay. Let's take a look. Where are we going? Doesn't look very bullish. What kind of, if you were trying to be a bull, you'd probably sum it like this, wouldn't you? So that will take the rest of the month. Right now, there's nothing that says bullish. Okay. We're not even, like, bulls were supposed to buy here. Okay. Bears were supposed to sell here. So, you know, there seems to be more bears, but we're supposed to be lower than this by now, right? So it just kind of looks like going into summer. Okay. But if you're a trend trader, so again, I'm not trying to reverse this. If I was a trend trader, I would try to stay in, okay? Which means you sell at resistance. Okay. That's all. Now, if you were trying to reverse it, you'd be looking at this as price action, right? You would see lower low, lower high, sell, lower low, lower high, sell, lower low, lower high, sell, double bottom, higher high, higher low, buy, right? So that's what a bull would be doing. They'd be thinking about it here. And a bear, well, they would have tried here and they would have tried here. So right now we're kind of in between, okay? But if you're a bull on this, get ready. Because bulls have plan A, which is called a 1, 2, 3. Okay, that's plan A. If you're a bull, I'll mark this, bull. If you're a bull, there's that. And plan B is basically play the triple bottom, right? And if you're a bear, you sold there. Is there anything else on here? I would say if you are aggressively a bull, you are looking at this as next week's trade, and your target's way the heck up there. Plus, you're backed up by potentially a market reversal. Yeah, Claudio says, I'm a contrarian trader and all that. You know, that's the one thing I like about trading and being a trader and hanging out with traders. I remember being at a hedge fund manager conference, really sort of a high-end, foo-foo, invite-only event in New York City, all hedge fund managers. And I remember thinking, like, everyone in the room does something different, and we all make money. I just love that. And I had lunch with this guy, and I said, so what do you do? And he's like, oh, I do convertible arbitrage. And we talked about it for a while, and I thought, gee whiz, I need to know more about whatever that is. I don't even know what that is, but it sounds awesome. And then he says, so what do you do? And I do, I just do Forex. And he's like, oh, I could never do that. It's too hard, too complicated. And I remember we're just sitting there, masters of our own domains, right? Thinking that, you know, we're the dumb ones. So I really appreciate that. So as a community, like, I've never once said what I do is the only way, or it's my way or the highway. You do need to understand fundamentals. You do need to understand technicals to put together trade plans, right? I mean, that's a common denominator across all the boards. If you can't do analysis and you can't set up a plan, you're not a trader. You're a reactor or whatever, you know. But we could totally disagree on direction, on trade planning, on tactical entries and exits, and that's the basis of a conversation. How long do you stay in a trade? Yes. Right. When do you enter? You know, all these things. What technicals do you use? What indicators do you use? Oh, I don't use any indicators. Oh, I use 1,000 indicators. They're all correct answers, because it comes down to you have to make a decision, and then you have to carry out your decision, right? You know what I mean? But you should be able to explain your reasoning. And many, if not most, new traders or amateur traders can't do that. They're like, so I'll say, why are you trading Swissy Kiwi? And you're like, it look good, right? And then I said, well, why does it look good to you? Oh, and then you have trouble explaining it. I'm like, whoa, that's the red flag. You're right. But I very rarely say, I think you are wrong and I am right. When I say things like that, it goes to like the level of maybe aggressiveness that people are taking toward their opinion, right? It would be that kind of stuff. But I don't know the future any more than anybody else. And I'd be a fool to claim I did. A mama didn't raise no fool. Okay? So that looks like it's set up for next week already. Get ready for a Friday front run. If you're a bear and you want this to come down, get ready for your Friday front run. Because it's Friday, baby. Run it if you got it. I've tried so many strategies as a new trader. It wasn't until I started watching you, Wayne, it made all sense. The confluence and rules got together. Right on, man. Well, I don't. So, JCell says, I've seen many styles, but this one works. The interesting thing is, like, since I'm self-taught, I never really considered it like a style or a strategy. Some people will say, Wayne's strategy. I I take personal pride in trying to understand and explain things in logical, almost in business terms, because I'm a businessman. I don't consider it like a strategy. To me, strategies seem very rule based and stuff. Um, I try to look at it as logic, like this is not going up, so therefore, right now, I don't want to buy it. And why is it going down and not up? Well, there's political risk, right? There's political risk in Great Britain. And risk is bad for a currency. It makes investment, even by locals, makes investment. Like if you're a business in the UK and you need to make a 10-year investment, how can you possibly analyze the risks of making that investment when you don't even know what the currency is going to be worth? I mean, like people are putting like factories and skyscrapers that were going to be built. They put it on hold because they don't know what's going on. So it's a really bad thing for the economy, and right? And people leave because of the risk. It's scary, right? So this makes sense. Will it fall forever? No, it won't fall forever. And then use a little bit more analysis and say, well, if it were to stop falling, where would it stop falling? Well, we already talked about this, right? If you're a bear, this is the exact price you would have sold July 1st. And if you had sold there as a bear, you would have expected it to stop falling right here. And we're talking almost literally to the pip. Okay? But even then, do you buy this? Well, nothing's changed. Right? So technical analysis, once again, would say, well, this might be a very interesting place to resell. And then, right? So let's mark it like this area looks like a great place to resell based on price action. Based on pivot points, another leading indicator, this is our sell zone based on what happened this week. So you put all those together. I don't know what the future is. But to me, it seems like it's pretty reasonable. It's not certain, but it's reasonable to think, this will drop next week. In fact, we talked about it about 3 days ago. Okay, we were still around here, and I'm thinking up and down, like, right? That was what, Tuesday I did that? Tuesday. We were talking about Friday front runs on Tuesday. Okay, do I know it's going to fall? No, I really don't. And is it risky? Yeah, we've already hit our target. Yeah, it's risky. But it makes sense to me. Right? It's not like a trick. It's not like some strategies are like very mechanical, all that kind of stuff. To me, it just makes sense. It's falling, so I probably don't want to be a buyer. And at some point, it will rise. It will rise. Okay? But if this is rising under these risks, I might want to buy something else. This may be the last thing I want to buy, but the first thing I want to sell. Now, if this does start rising and I start buying other things, then that could be very meaningful. It would represent something going on globally, not necessarily just the pound. Now, if Great Britain gets its political risk to diminish, right, they solve their Brexit issue, then maybe this will go up independently of global macro. Cool. But we would see that in all pound pairs, and we might say, oh, well, we have hit a bottom in the Great British Pound, and from now on I want to be a bull. And then you change your bias and you can explain it. And now you use technical analysis to buy dips and move your stops and remove your risk. Cool. That's all it is. But you have to have that big picture first. Okay? We want to take guessing out completely. Okay? You never want to say things like, I think, I believe, it's my opinion. No, you should be able to put it all together in trade plans. Okay? So for example, that's a bottom, that's a high, this is the bullish entry. Okay? Straight out of the swing trading course, there's no doubt, no debate, no discussion. That's as basic as it gets, and that's where I want to get you. That you're like, okay, well, you can explain this. You're like, well, I think maybe based on a Chinese recovery and let's say less bad global macroeconomics, you believe in the Asian Pacific currencies, or you believe in all commodity currencies, or whatever you believe, but you believe you're a buyer, okay? And it's giving you buying signals. Price action, pivot points, very clear entry, okay? There's no debates, there's no crazy risk. We're not reversing the market, we're getting involved with the market. There's a big difference. Okay, that's why I say, like, in that Euro Swissy scenario, okay, I get it, the central bank's defending and all that, cool, right on. But I'm not going to teach people to be the first one in. I'm not going to teach people to reverse the market, but when the market reverses, they should participate. Big difference, right? Okay. So, do you want to talk about the future? If you're a bull on this, what would a bull do? Well, let's look at, old resistance. So let's mark this. I'm going to go off of the real body here. Okay? Right on. So, based on that, we have a plan A price and a plan B price. So plan A is what? Plan A. A equals buy at central pivot. Plan B is equal to buy at M1. I'm going to place a caveat though. M1. Then I'm going to put a star. The star says it has to be before Wednesday. Ideally Monday or Tuesday. So like if Tuesday we're down here, that's cool. Then you start to look for a buy. If it's Friday, forget about it. If it's Thursday, nope. Back off. If it's Thursday or Friday, back off. If it's Tuesday, not a problem. Take the shot. Okay? So that's plan B there. Plan A will look like this. Okay? I just planned out Kiwi Yen for Monday. You're welcome. Are you doing this? Are you printing them out with these notes? Are you posting them on your wall, looking at them on Saturday, looking at them on Sunday? Are you going to be at your charts, let's say no later than 6 p.m. Eastern Time on Sunday? What if this sets up today before 5 p.m. on Friday? Like, right? I recommend that you print the charts out and you draw all this with a stinky felt tip marker. That goes as why before Wednesday. It comes from swing trading theory. If it's before, right? Put it this way. If it's before Wednesday, it's such a quick move that people are going to take their quick profit and run. If it took them all week, they're not emotionally threatened. Which means they just might stay in, and that's a problem. The other thing you should be doing over the weekend is printing out your charts for every trade you made. And you take a piece of paper that you can't see through, and you cover your charts, and you relive your trades candle by candle, analyzing your entry and exit, and then maybe taking a couple of notes. What did you do well? What did you not do not so well? And do that for every trade you made. So if you made 12 trades, you got to do it 12 times. Yes, 12 pieces of paper. It's going to take time. And then you'll find, if you look at the strengths and weaknesses for every trade that you did over and over again, you might have a common theme. From the common theme, you then do strengths and weaknesses, and you list them all out. And then you actually write down, what are you going to continue doing right? You have to reward yourself. Maybe even give yourself a nice bottle of wine if you're still crushing it on the 1 minute chart, and that's a strength of yours, and you've recognized it. Keep that up. But then you have to write down, realize, and then manifest. Write down, realize, write down, and realize your weaknesses and strategies. That's part of the manifestation. The strategies you're going to work on this week to improve, let's say, one weakness of yours. And by the end of the week, you want to be able to see specific actions you took to improve at that weakness. If you actually do stuff like this, first of all, you have a ridiculous, sickening work ethic, which I believe is required. But the second thing is, if you do this week after week after week, and you make a lot of trades, you're making 25, 30 trades a week, you might discover that is too many trades. I'm not saying it is. Sometimes I've made 100 in a week. I'm not saying there's that magic number. But what you might recognize if you're going through a mediocre period profitably is you might find 30 or 40% of your trades are mediocre. At best, some of them might actually suck. And you find out that you're actually really loosey-goosey on your trade setups. You kind of have a trade plan, but then you're just firing off trades willy-nilly. But if it takes you 30 minutes, every time you pull the trigger, it's going to take you 30 minutes to go through, print it out, relive it, identify your strengths and weaknesses, write it down in the strength and weakness column, and all this kind of stuff. If you end up spending, let's say every Sunday, you end up spending 4 hours reviewing your trade plans, something amazing is going to happen. First of all, you're a kick-ass trader. Nothing's going to stop you from your success. I totally believe if you do that, it's going to happen. Most people are not successful because they are not willing to spend 4 hours on a Sunday working on something that's going to radically change their life and the life of all the people around them forever. 4 hours is too much work. So what'll happen, though, is you'll start to identify that a lot of your mediocre trades are getting in the way. And because it's so much work to go through all this, you stop making mediocre trades. You start changing your behavior, and that is the key to your success. Because you're about to take another BS trade, and then you're like, wait, this is going to cost me a half an hour of my time. See, psychologically, you expect to lose money. So if you do some stupid trade that's barely planned at all, and you lose money on it, you're like, yeah, well, everybody loses money on Forex, right? And you got an out. But if you go to pull the trigger and you're like, well, this is really a piss poor trade. I don't know if I have even a plan. And if I pull this trigger, it's going to cost me a half an hour of my time on a Sunday afternoon. Yeah, I think I'll skip it. You know, the first step to doubling your profitability is getting rid of the bullshit trades that you make. And you don't believe me now, but I wrote a magazine article about it years and years and years and years ago. And what happens is once you actually create discipline and you really have a bias, you really have trade plans, and you really are disciplined, you will work less time and you will be much more profitable. And one of the major reasons for this is it's one less loss. Okay? Let's say you go from making 5 trades, 2 of them are losers. It's pretty reasonable. Okay? To double or nearly double, or let's say significantly increase your profitability, all you need to go from is 3 out of 5 to maybe 4 out of 5. Or, right? Or you only lose 1 out of 4 instead of 2 out of 5. But you get another hour of your day, or maybe 2 hours a day to live. You get an extra 10 hours a week of life. You get an extra 40 hours a month. You get 500 hours of your life per year to do whatever the hell you want to do with it, and you'll probably make more money because one less losing trade. Now, how do you get one less losing trade? Like, I'm not saying making more winners or bigger winners. I'm saying one less losing trade. And how do you do that? Better planning, more discipline, less mediocre trades that you just throw down on a whim. Oh, this looks good. Ugh. It will blow you away. But that means you got to be a hardcore disciplined trader that does the analysis. The money's made in the analysis, not the trading. Trading is the easiest. Okay? Get better at analysis, get better at planning. Trading is the easiest, most boring part of trading. Right? I'd rather buy this. That's straight up boring, obvious trade than trying to reverse Euro Swissy on a whim. Trading should be straightforward. You should be a bit surprised. Like, for example, if this one had gone down like this, I could say, well, I guess there were some bears there, but we made a higher high. And I thought this was a reversal pattern. Like, this was really good. Like, I really expected this to go up, but it went down. Lost a little bit of money. But it really should go up. That's my point. It really should go up. Yeah, Roman says you can have 9 winning trades out of 10 and still be a loser. Yeah, well, I'm not talking about that, right? So you got to remember, Roman, like, by definition, I believe I'm a trend trader first and a swing trader second. Okay? Now, that type of trading means, let's say, I'll just make up numbers. Let's say my average loss is 50 pips. My average winner is 150 pips. I'll just make up some numbers, right? So there's no way that could possibly happen. Okay? You'd have to be a scalper to have 9 winning trades and lose money. I can't even imagine. But you're right. Okay? Once again, you are right. but I've never in my entire life recommended a scenario where that would be mathematically possible. Okay. Okay. So for example, I just know, like, for example, I'll pick something. Let's say you're a bull on Kiwi yen. I'm just picking one. It could have been a bear. It doesn't matter. And every week, if you want to do it, so that gives you 50. Every week you did a bullish swing trade. Many weeks you're going to be right. Many weeks you're going to be wrong. I don't think you can lose more than 50 pips on a shot on those types of trades. You can see you clearly make somewhere between 100 or 200 pips, right? So if all you did was this one trade, week after week after week after week, there's like, here, this would have made you money. This took took a while, but it made money, and this made money, and this made money. It's the same trade over and over and over. Next week, you're going to try it again. Next week's trade's right here. So boom, you're going to do this next week, and the week after, and the week after. And the weeks you're wrong, you're going to lose 50 pips. On the weeks you're right, you're going to make somewhere between 100 and 200. And you just do it over and over and over and over and over again. And then at the end of the year, you're going to be a big, fat money maker. Why? Consistency. And what's the maximum you could possibly lose? 50 pips a week times 50 weeks. And then you think, well, if some of the time I'm right, you only have to be right once a month to break even, and right? And wrong 3 times a month, right? And you still are basically break even, most likely, not depending on volume and volatility and range and all that kind of stuff. But you can, but I'm trying to get you to, what if you're right 2 out of 4 times? 2 weeks you make money, 2 weeks you lose money. So you're down 100 pips on the downside, but you're probably up, I'll split it and say 300 pips. So you're making 200 pips a month. I would expect that to be about right, times 12 months. So you're probably at 50% correct, make 2,400 pips a year. And of course, you're trading 100 lots, so you're going to make $24 million a year. It's just that easy. $24 million a year, and half the time you're wrong. But you get the math, right? I'm trying to show there should never be a scenario where you're right 9 times out of 10. But I know a lot of people, like Roman brings that up. Actually, Romans, I'm going to go back to this. Roman says the problem with swing trading is you're vulnerable to unexpected fundamental economic data releases. I would disagree with that. I would disagree with that. I find it liberates me from those things. Okay? But anyways, we've gone too long. I'm off topic, all that kind of stuff. So let's move on.com. Have a wonderful week, a wonderful weekend. I am going to head off to Florida with the family, get some beach time, all that kind of stuff. Cool. Looking forward to it. I've been away a long time, so to have some time with the kids building sandcastles sounds really good. Put my wife in strappy shoes and go to a nice restaurant or a bar. That sounds really nice. So I will be doing Monday's webinar from the beach, and then I will be back home on Tuesday as normal. So, but once again, I am bringing you with me because you are that important to me. Okay? I'm sure I could take a day off, right? I've never asked for a day off. So you're coming with me. By the way, you're going to have to chip in $1,000 to pay for the room. So anyways, so just a quickie should be fun. So I'll see you on Monday from the beach. And without further ado, peace on earth. May the pips be with you. May your profits be above average. Please subscribe, like, and comment. So comment. Leave a comment on the recording. If you can't wait for the recording, leave a comment on yesterday's video on YouTube. Say thank you, say awesome, what you learned, or what pair you want me to cover on Monday, whatever. Leave a comment. And of course, liking and subscribing is great. Okay. If you need my charts, charts.fxbootcamp.com. See you Monday.